So we're very pleased to have Brian Lynch with us here from the Department of Revenue. Brian comes every year. We look forward to your annual visit to discuss circuit breaker, which is probably one of the most overlooked forms of tax relief known. And the nice part of it is in Wayland, we match that amount. So I want you to know that we are recording this today for WayCAM. So you'll be able to go on to waycam.tv and be able to pick up additional information. Also with us this morning will be Sue Hatton, our outreach coordinator, available to answer questions afterwards.
Excellent. Great. Thank you, Julie, for the invitation.
Thank you very much.
Appreciate it. Thank you very much. So as Julie said, we're here to talk about the senior circuit breaker tax credit. Kind of a funny name. People always say circuit breaker. What's up with that? It wasn't my idea. It originated, I think, in Michigan, I want to say. The person that developed the concept, they used an electrical outlet. When it's a little bit overwhelmed or burdened, the circuit breaker is activated or tripped to provide some relief for a burdened electrical outlet. So they use that analogy with real estate tax. So for seniors who are generally on a fixed income, but realize that their real estate tax seems to increase every year, this credit through the Commonwealth of Mass is in place to offset that rising, that kind of imbalance of fixed income to rising real estate tax. So I'm with the Department of Revenue, Commonwealth of Mass, and the maximum credit for 2019 is up to $1,130. So pretty nice, pretty generous. Hi, we're just getting started. Come on in. So not that everyone's going to realize $1,130 because everybody has different income and everybody pays different real estate tax. So we're going to talk about the calculation, how to determine how much credit you would be eligible for. So there are also, really the first criteria is you need to be 65 or older by December 31st of the tax year. If you file jointly with your spouse, as long as one spouse is 65 by December 31st, provided that the numbers work for you, then you're still eligible, you're still in the running. There are some income eligibilities as well. If you're single, your total income has got to be less than $60,000 for 2019. If you're married filing jointly with your spouse, your total income would be less than $90,000. Some folks file as head of household because they have a dependent person living with them where they're providing more than 50% of their financial support. And that qualifying income this year is $75,000. And when we talk about total income, we really do mean total income. We're going to include Social Security, any distributions that you might have. You have a part-time job, you're collecting Social Security, bank interest, dividends, capital gains. So all of that is included to determine what your gross income is for the year.
The income on the front page of the tax return?
Generally, yeah, but your 1040, your federal return, would probably give you a better idea about what your total income is like, because the state doesn't tax Social Security, so that wouldn't appear on your state return. But even federally, it depends what your other income is like to determine how much of your Social Security might be taxed. For example, like the federal government doesn't tax your Social Security, blanket, everyone's going to pay federal tax on the Social Security. If you're single, your other income, aside from your Social Security, would be more than $25,000 before your Social Security would begin to be taxed. Married joint, it's about $32,000. And the more income you have, other than, once we go up with those amounts, the more of your Social Security is going to be taxed.
But you take deductions for real estate tax?
Yes,
So is this the number before that?
Yeah, so we're talking gross income.
Gross, okay.
Yeah, gross, yeah, not net.
Is that what you call adjusted gross income? Because it says that in the papers.
Yeah, pretty much, yes, adjusted gross, yeah, that's
So
reasonable.
that's a bigger income.
It is, larger amount, right. So what we're trying to determine is, do people need help paying their real estate tax? And what we want to do is we want to look at what their total income is compared to their real estate tax paid, okay? The calculation is really straightforward. It's, we're going to look at 10% of someone's total income, and we're going to compare that to the real estate tax that they paid, and they're able to add half of their water bill to their real estate tax. by adding half your water bill, we're trying to boost the credit for you a little bit, we're trying to increase the credit.
You have to prove that to them, the water bill?
We may send you a letter asking for a copy of your water bill, yeah.
See, I have a condo fee,
Okay,
and the water bill's included in that.
okay, so good point. It's very common, gentlemen's living in a condo complex and maybe your homeowner's fee includes the water, right? So what you could do is, you're still eligible to take your portion of it. You could get in touch with whoever is paying the water bill, the manager, the trustee, whoever it might be. Ask them, what was our total water bill for the year that you paid? And you would apply your percentage of ownership to the water bill. So if you own 15% of the total complex, you can apply the 15% times the water bill that was paid and take half of that amount.
But do you have to send that in with the paper?
You would not need to submit it with the return. Good question. You don't have to send in a copy of your real estate tax bill with the return or a copy of your water bill. But after the fact, when we receive the return, you might get that dreaded letter from us asking for a copy of your real
It's just like
estate.
filing your taxes on trust.
Exactly.
But they could question it.
Exactly, yeah. And it's kind of common that, especially the first year that people applied for the circuit breaker credit, that we're going to question. Once we see your real estate tax bill and we see your water, we kind of assume that next year it's pretty much the same. So we probably wouldn't bother you year after year with the same information.
And could you go back the years you missed?
Okay, yes, a good question. So I know right now everyone's working on their 2019 return. I like to say that the prior 3 years are still open, are still available. So on my handout, you can see that we've got 2016, 17, 18 is still available. 2016 is time sensitive. If you were to be eligible for 2016, you need to apply for that by this coming April 15th. So here we are today, March 4th, at the Council on Aging, and we've got just a little bit more than a month that if someone were to apply for 2016 again, the deadline for us would be April 15th.
But if you did apply for all 3 years, it's possible you got a check in the mail for $3,900.
Exactly, yeah, that's true. So I have spoken to people at a session like this where they come and they just learn about maybe the current year, and they realize that they've been 65 for the past few years, and that they're eligible for the prior 3 years as well, and they could benefit by about $4,000 from Commonwealth Mass. So the nice thing about this credit, it's refundable. And what I mean by that is, with most tax credits, if you're eligible for a tax credit, you always take the credit and apply it towards your tax liability first, because we always want to try to diminish our real estate tax, our state income tax. So we're always trying to bring that hopefully to zero. Most tax credits, whether it's federal or state, once you're able to wipe out your total liability, that's usually as good as the credit gets. You might be able to carry forward credit to the coming years, coming ahead. But with circuit breaker, if you have a balance after you wipe out your real estate tax, your state income tax, you're going to get that balance amount refunded in full from the state. We'll put it in your bank account if you want, or we'll send you a check. Sometimes people say that they don't think that circuit breaker applies to them because they're living on Social Security, or perhaps a public contributory pension. They're a retired school teacher, a retired police officer, firefighter, which the state doesn't tax those public pensions. So sometimes people say, well, I don't need to file a return. But I tell them, don't discount yourself, because you don't need to have a state tax liability in order to get the credit, get the refund amount, okay? Again, so everyone's going to have a different credit amount. Some people, when they do the calculation, they're not eligible. Other people might get a $300 credit, $500. Some people get the maximum. Again, this year it's up to $1,130. So, tax people, we have a form for everything, at least one form, right? So we do have a form specific to circuit breaker. It's Schedule CB. Schedule CB in the booklet, or if you use any type of tax software, it would be available in that package as well. Schedule CB is where you're going to do the calculation to determine what your credit is going to be. It's going to ask you to add in all your to get your total income amount and take 10% of that. And then we're going to ask you, what did you pay in real estate tax? And you're going to be able to add half of your water bill to the real estate tax and compare the two amounts. Okay. This credit has been in place through the Commonwealth of Mass for almost 20 years. The Commonwealth is generous related to this, but to a point. So you can see, I talked earlier that you can go back the prior 3 years. That theory applies both federal and state. If you kind of overlook a credit or you missed out on something that you wanted to take advantage of, you have 3 years to apply to do that. But then there's a limit. So that's why I mentioned the limit for 2016 is coming up this April 15th. Okay. What questions might you have on what we've talked about already? I can bring you up to speed if you
There's a
want.
worksheet here.
Yep, so the schedule, you found the schedule in the book, I see, Schedule CB. I'm sorry?
Where do you sign it?
Okay, so the schedule is going to accompany your tax return. You wouldn't submit the schedule alone by itself. The schedule would just be one form that you're submitting to us.
You don't sign it, but what if you already sent the tax return in, like, you want to go back?
Okay,
Prior year.
so if you filed the return previously and you weren't aware of the circuit breaker or didn't take advantage of it, you could file an amended return. You're going to file the return again, the second time, but this time would be correct or in full, like you'd have all your information included. So you'll notice on the Form 1, which is our income tax return, there's an oval right at the top, right after you put your name and address. We ask you, is this an original return or is this an amended return? So if you're amending because you're going to go back and amend your original return, again, Form 1, this is the front page
that's
of the
Form 1.
return. Yep. So the Schedule CB is just one form that's going to be part of your return. Okay. So here we are here. So when you file your Form 1 with us, it's either an original return or it's an amended return.
If you file the Form 1, can you just send in the actual return you did before?
Yep, so what you would do is you'd probably copy a lot of the information from the original, but now you'd have an amount on line 44, which is the circuit breaker. That's where the circuit breaker is going to kick in on the return. So line 44 is coming, the amount is coming from Schedule CB that you've worked through to determine how much of a credit you're eligible for.
So that's the only thing you have to fill out?
You would fill out the whole return again, but this time you'd have, in addition to all the other information you had previously, you'd have an amount on line 44, and you'd also have Schedule CB included, which you didn't have originally. So it's pretty straightforward. It's not that complicated, right? Sometimes people think, the tax stuff is, they make more out of it than it is at times. It's really pretty straightforward.
I didn't know Wayland matched.
Yeah, so that's a very unique thing with the match with the town of Wayland. It's terrific. So you need to apply by April 1st, and you can submit your 2018 Form 1, your Massachusetts return, to show the town the amount of your circuit breaker that you got in tax year 2018. Because I know although right now everyone's working on their 2019 return, a lot of people file an extension which gives you 6 months, and you really don't need to file the return perhaps until October 15th. But the town, they're going to base the match amount on your 2018 state income tax return. So you would get in touch with the assessor's office. Again, by April 1st, it's a very hard and fast deadline. So it's a wonderful benefit. I mean, I don't know of any other city or town that matches the circuit breaker amount. So it's really great.
But you can't do past years if you don't.
Probably not, because I think you have a deadline every year. Yeah, okay.
They can only do the current fiscal year.
Okay, good point, yep. So again, I would really hate someone to miss that April
Catch it
1st
now.
deadline. You know, we only have a few weeks to submit your 2018 return, and that's the amount that will be matched by the town. So it's great.
That's in Wayland?
Yes.
Town of Wayland, yes.
Oh, yeah, I'm from Clinton.
Okay. Maybe you can bring that up at the town meeting. See if it goes over, see how well that goes over.
I don't know about yours, but ours are very excessive.
So the amended one is 2 pages.
No, actually, our income tax return is
No, I'm
2
not-
pages originally.
If you want to amend it.
Yep, so again, you just need to file the return again,
Yeah.
and then you'd have Schedule CB enclosed as well. So I think you're looking at total of, so you got 1, 2, 3.
But what's the third one, Schedule C?
So the Form 1 goes on, right? So you've got Form 1 is actually 2 pages
Yeah.
for an original. And then now you're gonna have Schedule CB as well, so you're gonna have 3 sheets.
Okay.
Question?
Are you representing the state?
Yeah, I work for Department of Revenue, yes.
Because I live in Carlisle.
Okay.
I've filed this for quite a few years without
Excellent.
any problem.
Good.
But it's 2015 return, which was filed last April,
Okay.
running late on keeping up to date on things, but
Sure.
it got knocked down instead of, I think the refund might have been 1,000 or thereabouts.
Right.
They said you only qualify for like 350, and I call up and try to say why.
Yeah.
And they said, well, I mean, I meet all the criteria. My house is assessed at maybe 600,000 or so.
Okay, yeah.
It's under the
Right.
limit. My income's way under the limit.
Okay.
And my taxes are way
Right.
over the whatever percent, but somebody there was arguing that, well, there's a 1 acre, your house
Okay.
only qualifies for a 1 acre
Okay.
it sits on it. And I think that's designed that if you have 20-acre property and you're assessed at a huge number,
Right.
you can't take credit for that whole number.
Sure.
But in Carlisle, everything's a building lot, and you have to have 2 acres
Okay.
to build.
Yep.
And anything up to, if
Okay.
you have more than 4 acres, you can subdivide and maybe make 2 lots, but I happen to have just under 3 acres.
Okay.
And the agent was saying that I gotta take my assessed valuation from the town,
Right.
and prorate it to 1 acre, which brought it down, and then she said, well, the rebate you get is only based on that percentage instead
Right.
of, and I said, wait a minute, that,
Okay. So
to
you
me, it doesn't
bring,
make sense.
you bring up a good point. So for 2019, the assessed value of your principal home in Mass has got to be under $808,000. So it's your home with 1 acre of land. And if the town doesn't provide maybe a breakdown of, if you own more than 1 acre, you'd have to get in touch with the assessor and say, I have more than 1 acre, could you tell me what my assessment is based on my home plus 1 acre? And you're gonna discount the other acreage. And maybe you'd fall under the 808, which would be great. But the same theory applies to the amount of real estate tax that you paid, in that we're only gonna factor, I'll give you credit for the real estate tax paid based on your home plus 1 acre. And again, the assessor would be able to tell you what the real estate tax amount paid was on the other acreage, and that amount is discounted.
Even though, I mean, if you have a vacant lot that's, say my lot was vacant, the town would probably assess it at close to 400,000.
Okay.
But now you put the house on it, the house is only assessed at maybe 150.
Uh-huh.
But if that house was sitting on 1 acre, it wouldn't be legal. I mean, you couldn't have a house on 1 acre because
Okay.
there's 2 acre zoning minimum.
Right.
So, I mean, I think their assessment, they don't pay attention, they just presume the land's worth this much, house is worth this much, and that's the total. But they don't separate out 1 acre, because they don't think that way.
The town doesn't give you a breakdown like that? Is that?
No, they don't. I mean, I don't know what, I think when I brought it up to them last year.
Right.
It was the first time somebody had brought it up, because I mean, like I said, for, I think, at least 5 or 6 years, I filed a circuit breaker and had no problem.
But we questioned 2015.
Yeah,
Yes, yeah.
so I was trying,
Yeah.
came here to try to see if I
Okay.
could figure out who to talk to. and
Yeah.
find out if-
I'd be happy to talk to you after the
Okay.
presentation, and anybody would be happy to talk to you. Sometimes people like to run some numbers by me, I'm happy to do that. But I think you've got the gist of it, in that we're looking at the assessed value of your home plus 1 acre, and you're gonna apply that same ratio compared to your total property with the real estate tax paid. We're gonna look at the amount of real estate tax paid for your home in 1 acre, and we're gonna discount the real estate tax paid on more than 1 acre. So although it might seem a little bit unfair, because you've got the real estate expense, that's the calculation, that's how it's done. I know it's maybe not really what you were hoping to hear, but,
Well, I'm just trying to figure out, I know it's not the intent of the law when Susan Parker was
Yeah.
working on getting it passed.
uh-huh,
So I'm just trying to figure out how to
yeah,
approach things with the town
yeah.
and say,
I think in your case, well, you said you have 3 acres, right?
well, 2.9, you know.
Okay, close to 3. Other parts of the state, some people might own, 10 acres of land, or, and I think that they just had to kind of make a provision that we're looking to provide a little assistance with the real estate tax for your home in 1 acre. That's how they wrote it. Again,
Yeah,
it's
but
been,
if it was legal to have a house on 1 acre, my assessment would be virtually the same.
I understand,
Um,
okay, yep,
The extra acreage, which does me no good, a lot of it's swamp anyway.
Right.
You know, they're just arbitrarily saying, oh, that's valuable property, we're gonna not pay you for that.
okay, yep. So do you have an option, you could appeal to the Department of Revenue. So if we reduced your circuit breaker based on more than 1 acre of property, you could file an abatement, you can appeal to us. And if we don't decide in your favor, you have appeal rights, you can go to the next step, which is the appellate tax board, and kind of plead your case with them and say, you don't think it's fair, and that's your course of action.
If the town said it was like unbuildable, the other part of his property, would
Right.
that count?
I don't believe that they get into
Okay.
swamp or unbuildable, or,
Okay.
yeah, I haven't seen any provision like that at all.
They just haven't thought about how to prorate their assessment value, to just put down house, land,
I see, yeah. Mhm.
where if I can get them to think about
Yeah, okay,
1 acre.
to prorate, yeah. I would think that they would be able to do that. I haven't heard that people have had a hard time with the
I mean,
towns.
Probably one of the few low-income people in Carlisle, otherwise a lot of people that have this problem, but most of them probably have
Mhm.
enough income, they're not going after a certain
Sure,
breaker.
I understand, yeah. And you had a question, I think.
You could amend the return with Massachusetts back to 2016.
Exactly, yeah.
It's okay to do still.
You can amend 2016, 2017, 2018. Just keep in mind that you need to amend 2016 by April 15th.
Okay, then the other thing is, the date on the form, if you're gonna amend, it says 2019.
Correct. Okay, so there's 2 options. If you need to get previous year returns, you could go to our website and you can print the previous year returns. So just in the search field on the DOR website, just type in tax forms, and it's gonna ask you what year you want. Or you can call us at the 800 number on the handout, and we'll mail you the book for the prior years.
When you call, do you get a live person pretty quick?
You do, yeah, yep,
Now, the tax form, you would say you want Form 1,
correct, exactly, yes. Income tax,
but it's gonna have that date.
yes.
To make-
So
you can't
I'm
cross
glad
that
you
out.
mentioned that. So if you're gonna amend this, because the circuit breaker amount is a little bit different for each year, it's increased about $20 or $30 each year. So the tax form, you need to file a specific one for the year. You
Right.
have to have 16, 17, 18, and I know, again, everyone's working on 19 right now.
Well, what do you think it was then, at 16? That you can get back.
Okay, so right on my handout, we've got 2016, the maximum amount of the credit was $1,070.
Oh,
Right here. Right
Oh,
here.
there it is.
Yep, 1,070. In 2018, it increased $10, went up to 1,080. 2018, we have 1,100, and this year we're up to 1,130.
So to get that tax form, is that mass.gov?
Yep, so you have our website right here, mass.gov/DOR.
So I have a question for you. A lot of the questions have been if you own the real estate, but what if you rent?
Okay, renters are eligible as well. Thanks for bringing that up. So renters could benefit by this as well, provided that they don't live in any type of subsidized rental arrangement. With renters, the income measure is the same. We're gonna look at 10% of the renter's income. and we're gonna compare that to 25% of the rent that they paid. If 25% of someone's rent is greater than 10% of their income, whatever that amount is, up to 1130 for 2019, that would be their credit, okay? Because the idea is, although you're kind of paying real estate tax indirectly, I know you pay the rent to the landlord, but the theory is that part of the rent that you pay, he's paying real estate tax on the rent, on the property.
So someone who got qualified through rental, could they also go back into amended returns?
Yes, exactly. So if someone did, if they were eligible for the prior years, again, they need to be 65 in that tax year by December 31st. And if the numbers work for them, then certainly they can go back and amend prior year returns, yes. Thanks for mentioning that. Good question. What other questions might we have on this? Again, if you want to talk to me personally after, I'd be happy to do
Well,
that.
married jointly, okay.
Yes.
90,000.
For 2019,
So
90,000.
just give an example, say you made 55,000.
Okay, so if my total income were 55,000, I'm gonna take 10% of that amount, which is $5,500. I like to think of 10% of anyone's income as like a break-even point. If your real estate tax isn't quite up to 10% of your total income, the credit is not gonna work for you. Once your real estate tax paid, together with half your water bill, goes over 10% of your income, or your break-even point, then the credit is in place. So the credit is kind of activated or tripped, like we said earlier. Once it exceeds 10% of your total income, that's when the credit is, that you're benefiting by the credit, and it could be, again, up to the maximum amount. So some people might get a credit of 300, 500, 7.
The tax is 6,000.
Yep, okay. So it sounds like to me with a tax of $6,000 and 10% of my income was $5,500, I have a $500 circuit breaker credit.
That's what you get back. Okay.
Yep. So again, the credit we're going to apply towards your income tax liability. So people have worked through the return, they've put down their income, taken the exemptions, deductions. Circuit breaker or any credit kind of kicks in at the end of the return. And I mentioned circuit breaker on line 44 of the return. So if you were going to have to pay a state tax of maybe $800 based on your income, but now you have a $500 circuit breaker credit, we're going to take the credit, apply it to the tax, now you only owe us $300. If you didn't have a state tax liability at all based on your income, but you've got a $500 circuit breaker credit, you're going to get the $500 refunded in full because you don't have any state tax liability to apply it to. So again, Wayland, it's really a very unique situation. It's really great that they matched the amount, and I would just hate anyone to miss out on that. So if you're watching at home, make sure you take advantage of the match. And you need to apply by April 1st, so you only have a few weeks to take care of that. And what they want to look at is they want to see your 2018 state income tax return. Okay? Because again, 2019, really the due date, it's not till April 15th, and if people file an extension, it will give them until October 15th to file for that.
Right. So if you wanted to do 18 though, you got to do the amended if you haven't already done it.
Exactly, yep. So if you're just learning about the credit and you had filed an original return, then you would amend either 16, 17, or 18.
Now, if you have an accountant, should they know this automatically?
If you go to a tax professional to have the return done, I think they should definitely be aware of this, yep. Again, the first year it was this has been around since 2001. So it's almost 20 years, it's nothing new. Shouldn't be a mystery to anybody that does taxes professionally. Especially where Massachusetts has a requirement for health insurance. So when you file your return on the Schedule HC to show us that you've got health coverage, we're asking you for your birth date. And so your birth date is on the return. Your tax preparer should know that you're 65 or older. They've got your income information. Just a quick question, what did you pay in real estate tax? What was your water bill? Pretty straightforward.
I'm a widow, and when my husband was alive, we weren't eligible.
Okay,
So
Yes.
everything's changed.
yes, okay,
But I didn't realize, I never saw anything advertised or,
okay.
you know.
Mm-hmm.
So another senior citizen, Pauline DeCesare, informed me, did you file for a circuit breaker?
Mm-hmm.
And I said, well, I don't know if I'm eligible. She said, make sure you're,
Okay,
you know.
good.
It is in the newsletter in Wayland, it's in over and over and over.
Well, honestly, there's no, they don't explain it, really. I mean,
No.
I had no idea what a circuit breaker
Well,
was.
neither did I, you can come down and ask the people behind this.
Right, if you know what it applies to.
Right, yeah.
Right.
Unfortunately, the name is very misleading, and I've
I'm like, circuit
suggested
breaker?
it should just be senior real estate tax credit.
Something like that would be easier.
Right.
Yeah.
I should also mention, in the tax book on page 36, there's a little bit more discussion. Well, basically, we've got all the information, but on 36 is the instructions to help you fill out the Schedule CB. So it's gonna walk you through the calculation on page 36.
Where's the pages number?
Yeah.
Right at the top. I'm gonna give this to you. What do we got here? Page 36.
I've seen the water bill, but now in Carlisle, we don't have public water, everybody's on wells.
Right, yeah.
So it's pretty hard to say how much my electric bill is going towards
The water.
the water.
Yeah.
Not discounting the costs of having a well and fixing it.
Yeah.
If something goes wrong,
Yeah.
you've got a couple of grand.
Actually, the way it's written is there really isn't even a provision to prorate the electricity used to operate the well. So unfortunately, that wouldn't help you out. But if you wanted to make any adjustments to this, you really should speak to your state legislators, like your state rep or your state senator. They're the ones that make the laws at the State House, and they're the ones that can change the calculation, or what they do is, once they formulate, then they hand it over to DOR, where I work, and say, okay, you folks administer it or enforce it. But they're the ones, and they, in the state budget, they have been allocating millions of dollars every year towards the circuit breaker credit. So we're fortunate, and I would anticipate that it's going to continue going forward, too. What other questions might we have? All right, I want to thank you for your attention today. I hope it was worth the trip. I hope you benefit by it. I hope you were able to take advantage of this. I'll be available after the presentation to talk to anybody directly. Okay, thank you very much.
Thank you.
Thank you.